What's up everyone, it's Austin Rutherford here. So do you need credit, good credit, to have success in your life? Yes and no, because it really depends where you're at in your current life and what your goals are. If you're anything like me, I'm trying to use my credit to go out there and get more assets, like more houses, more rental properties, more apartment buildings, and everybody wants a car at the end of the day as well. And to get all those things, unfortunately, you need to have at least decent credit for banks to be able to finance you to go out there and buy those things. So in this video, I'm gonna tell you how you can get good credit and some good things that you can do along the way to keep that credit once you get it. Make sure you smash that like button for the YouTube algorithm. It'd be greatly appreciated. So the question about credit, like, do you need good credit, right? So when you go out there and you buy a house or a car, they base that loan on your personal credit. They run a background check, they pull a credit report, and it says, you have a 500 or 600 or 700, 800 credit score, and that number determines a lot in that process. And sometimes when you're below a certain credit limit, you can't even get the loan. So it doesn't even matter what you say or do or how much income you have, you can't get the loan. And kind of on the other side, the lower the score that you have, the higher the interest rate. The higher the score that you have, the lower the interest rate. So in real life, like, what does that actually mean to me? What does it mean to have a high interest rate or a low interest rate, right? So if you look at this picture here, this is assuming you're buying a $300,000 house and you're putting 10% as a down payment. So you're putting $30,000 down. So you're financing $270,000 of this property. So the top one is good credit, the bottom one is bad credit. So up here, you're going to get a 3% interest rate because you have good credit, which means your monthly principal and interest, this doesn't include taxes and insurance, but your principal and interest will be $1,138. Now, that same example, if you were to have worse credit and you got a 5% interest rate instead of a 3% interest rate, your payment on the same exact house will be $1,449, which is a difference of $311. So what does this actually mean in real life? You and I could buy the same exact house, and if your credit score is higher than mine, you're paying less for that same exact property. And the other really cool thing that comes into play here, the higher credit score you have, the lower the interest rate, which means that the more house that you can afford. So you can get a nicer house for the same payment as somebody else with not as good of a credit score. So that's why you need good credit for houses, for buying a personal house and or rental properties that you want to own into the future. You need credit to do those. So what about cars, right? This may sound crazy, but I can't even get financed for a car, right? You need credit and some other things, and this is what we're going to talk about here. But like, I can't even get financed for a car if I wanted to right now. I have great credit, 750 plus credit score, because the way that banks loan money on cars is it's like a step up process, right? Like, they want to see you get a car loan for $10, $20, $30,000 and start paying it, and then upgrade and get a loan for like $50, $60, $70,000 and keep paying it, and then upgrade and get a loan for like $100, $120, $130,000 and keep paying it, and then keep working your way up, right? Problem with me is the first two cars that I bought were cash. Then I went to try and buy the Rolls Royce Wraith. It was a $200,000 car, and I tried to get it financed, and they wouldn't finance it because I went from zero to 200,000. Even though I had good credit, I didn't have a track record, right? You gotta have a track record as well with building that credit. So I had to get like some unconventional financing. I still got it financed, but it didn't work. The rate that I had to pay was higher because I didn't have that track record. I didn't have that experience. So enough about why. Let's start talking about how you can build the credit score. So if you're super young, or maybe if you're an adult watching this video, there's an amazing way that you can build your children's credit score. Is you have credit cards that you use on a regular basis right now. You can sign your kid, son or daughter, to be a signee on that credit card. So just don't give them a credit card, obviously, but they count on your record. So every payment that you make, you're building their credit score, right? Every payment that you miss, you're hurting their credit score. So only do this if you're actually going to do the right thing and if you're going to make your payments. Otherwise, you can destroy their credit. But that's what my parents did. I didn't even know about it. They added me as a signee on their credit card. They never gave me the card, but they had the card, and they didn't do it for this purpose either. They did it just in case I needed the credit card, but it worked out amazingly because when I was of age, I had great credit because it looked like I've been paying on my credit for years, but it was really them making payments on their credit card, but I was just a signee on the account, so it counted for me as well. So again, if you're young, maybe talk to your parents, or if you're an adult watching this and you have kids, take a look at that, because I promise you that helped me out massively in my business and in my career. Another way is you have to open credit cards. Like, when I came out of high school, I was scared of debt. I was scared of credit because it was never talked about in school, right? Never talked about. So when you're young, you have to get credit. So sometimes when you go to apply at a bank to get a line of credit or a credit card, they won't approve you because you have no credit. So what you can do is you can do like a cash deposit credit card. So you can put $1,000 in an account and then they give you $1,000 limit on your credit card. So I know that doesn't sound great. You know, it's my money that I'm giving to get the money back. I know it sounds dumb, but you have to do what you have to do sometimes. If you have to start that way, but get a credit card of some sort that you're responsible with, which we're going to talk about here in a second, at a younger age, so you can start building your credit positively from a very young age. So what are the right ways to use that credit card once you get it? So you never want to use more than 30% of your limit. So if you have $1,000 limit, you never want to put more than $300 on that credit card. If you have a $10,000 limit, you don't want to put more than $3,000 on that credit card. And why is this? Because the more you use out of the credit bureaus think that you're bad risk and that you're making not the smartest decisions, they'll ding your credit score. So you want to use up to 30%, and you want to pay it off ideally every month, but you never want to miss a payment by any means. And this is something I was told years ago, and I don't know if this actually works, but it's something that I started doing just in case. But a buddy of mine told me is that, so you make a payment once every 30 days, right? He said it's not counted on a 30-day basis. It's assumed that every payment that you make is a 30-day payment. So if you make a payment every day for 30 days, you have 30 months of history instead of 1 month of history. Again, I don't know if this is true or not. It can't hurt you. So I've done that in the past to try and get my credit score back up, but like I make a payment on it like every few days to hopefully try and increase my credit score and give me more of a track record. And anyways, if you're spending more than 30% of your credit limit, you have to pay it off because you don't want to use more than 30%. So spend the 300, pay it off. Spend the 300, pay it off. Spend the 300, pay it off. Now, let's talk about bad debts. So I have some friends that, have said, well, I just stopped paying on that. I'm like, what do you mean you just stopped paying on it? Like, why? Maybe they got a credit card and they ran it up when they were, a teenager and just stopped paying on it. Or maybe they have student loan debt and they're just like, forget that, I'm done, I'm not paying it. Or whatever it is, they have these bad debts. Every single month you don't pay that, you get dinged and dinged and dinged and dinged and dinged, and your credit score gets trashed. So if you have bad debts, you actually have to make the payments on them. And I know it's gonna suck, you owe somebody money, pay the people their money in the first place, but you can't just ignore it. If you just ignore it, your credit score will never come back. You have to get everything back current to hopefully be able to increase your credit score. So for me, what do I use my credit card for? I literally use my credit card for everything. I don't even carry a debit card anymore because that's the power of it, right? And there's two reasons. Because one, I'm always trying to be building my credit, right? I'm always trying to be building it. So I use it, pay it, use it, pay it, use it, pay it, use it, pay it. And the big thing here is that I don't put things on credit that I cannot afford to buy today unless it's an investment property. But I'm not buying a Gucci or Louis or Prada purse now that I can't really pay for today in hopes that I can pay for it in the future. So if I swipe my credit card, I have the money in my bank account to pay that off immediately. People get caught up like just swipe, and then they see their credit bill and it's like $5,000 and you have $500 in your bank account. It's like, ooh, like, how am I gonna pay for that, right? So only spend the money that you can actually pay on the credit card. But I use my credit card for everything. I use it for gas, I use it for food, I use it literally for anything and everything. I'm using it all on credit, not debit, because I'm trying to build my credit score and I'm paying it off. The other cool thing, and that's not what this video is for, but when you use your credit card, you get points or cash back. So you get free money to use your credit card. So why would you not do that? The more you use your credit in a positive manner, the faster your credit score will start to increase. And again, you have to make the payments, otherwise you're gonna get absolutely destroyed. I know you don't wanna be the person that wakes up when they're 20 years old or 30 or 40 or 50 or 60 years old or whatever it is, and they realize how important credit really is. And this whole time they've just been destroying their credit, not making payments, running up credit cards and not paying them off. And they look at their credit score and it's 500. Like, that's not where you wanna be, I promise you it's not. Leverage your credit for assets, right? Not for liabilities. Don't buy a TV that you can't afford today in hopes of paying it off in the next 6 months. Don't go out and buy, the Gucci, Louis, Prada in hopes of paying it off in the future. Leverage your credit for assets today. So when you buy a house, you're not buying it in cash because you can't afford to buy a $200,000 house in cash. So you put a down payment and get bank financing for the rest. That's okay, because that house is gonna pay for itself. The rent coming in will then pay and cover your mortgage payment. That's what real credit is supposed to be used for. It's to increase your assets and not increase your liabilities. So if it's done the right way and you're using it to buy income producing assets, your credit score is gonna continue to go up. I promise you, you will thank yourself years from now when you can go out there and you can get any type of loan that you want because you have the credit to back it up. So comment below, let me know your thoughts on this. If you learned anything or any questions that you have, make sure you smash that like button, subscribe, and notification bell so you can get all this content going forward. As always, appreciate you being here. We'll see you on the next one.